I'm joined by Akhil Chaturvedi, Executive Director and Chief Business Officer, Motilal Oswal AMC. Akhil, hi, good evening and welcome to the show. And I'm also joined by Hemant Usugi, who's the CEO of Wise Invest. All right, Hemant, let me just come to you first because it's very important to understand the investor sentiment out here. How do you really read between the lines? Do you also think is it just chasing returns that we are witnessing?
No, Kavita, I don't think it's really that investors are chasing return. I think we've seen this trend over the last many years that investors have been investing through SIP. We've seen how the retail participation in equity funds has increased over the years. And I think this is a trend I believe that it's not like one-off. We've seen this happening for the last few years, and I think this is going to continue. That's mainly because I think the way investors are looking at investment has changed. Most of these people who are investing through SIP are the ones who have started following goal-based investment process. And I think that's one of the reasons why they have stayed invested despite the fact that there have been certain bouts of steep volatility in the market, because they're keeping their focus on how much time they still have, what are the goals for which they're investing. And I believe that this is one reason that investors will continue to invest in mutual funds, specifically if we talk about equity fund. I think the important thing, Kavita, also is that it's not that investors are investing only in the equity fund, they're also investing in multi-asset fund, balanced advantage fund. So clearly, depending on the risk profile, you will see the maturity in what kind of decisions they're taking. So I believe that this trend is something that will continue, and that maturity that investors are showing, that despite the fact that there is hardly any return in the last 1 year, but investors have kind of continue to invest in mutual funds, especially equity fund. I think it speaks volume about the fact that investors have understood what is the right way to invest going forward.
All right, Akhil is also connected. Akhil, hi, and welcome to the show once again. Okay, so according to you, what are we looking at? A record inflows. 81% record high, 42,702 number in equity inflows we're talking about, Akhil, and in that also we are seeing a revival of sectoral and thematic funds and also a comeback of debt. Also, you can owe a lot to the NFOs also, which we saw coming in July, almost 30 schemes, out of which we've seen a considerable amount coming only from 5 debt schemes. Now, having said that, you think investors are playing well with the volatility in the market, Akhil?
Hi, good evening. I would like to actually agree with Hemant that we are actually in a structural, fundamental growth story for the mutual fund industry. I think we are seeing a fundamental shift in the asset allocation pattern of retail investors. And very happy to share that a lot of investors are participating into capital markets via the mutual fund, which is, I think, one of the best routes to participate, whether it is equities, whether these are hybrid products or fixed income products. This month, of course, has been one of the best months for the current financial year. But what you have to also see is that even at the worst of time, which was April of 2025, when there was a lot of uncertainty, there was also the India-Pakistan war issue. Even in that kind of a month, we have seen 18,000 crores of net positive sales, right? And from there, we are seeing build up, upwards. I think last month was about 23,000 crores. And this month, of course, is an outlier. I mean, clearly the NFOs, almost 10 odd NFOs contributing to 9,500 crores of incremental flows has given the momentum to the overall sales in July. But clearly remarkable month. But I definitely feel that this is a fundamental and a structural shift in the asset allocation pattern of retail investors.
All right, but then, Hemant, what do you have to say about the SIP stoppages number? So SIP stoppages, which is also on a rise, doesn't mean that these investors are going away from equity. Can we understand it that way? Or do you think it's concerning?
No, I don't think that's the right way to look at it, Kavita, that if there is a stoppage that investors are going away, there can be different reasons. Like I said, investors are investing with a defined time horizon. When the time horizon completes, they kind of, the SIP gets stopped and they restart. And it could be that they're in fact investing more or maybe doing more number of SIPs, right? Second thing is, I think there was a cleaning up exercise done by the registrars to make sure that all these SIP that stopped over the last few years are taken out of the system. I think That's one of the reasons why we saw that the large number of SIP that was stopped, because that was brought into the system. So my belief is that, look, it's an ongoing process, Kavita. Look, there are new investors coming in. There are investors who are completing their time horizon. Some will go out. Some will, come back again, invest more money. Because, again, let's not forget that when we talk about increasing your SIP over a longer period, sometimes what happens, this trend has also changed now, Kavita. Earlier, people were investing, like investors are usually going for 3 year, 5 year. Now they say they're actually opting for longer duration SIP. So I think all these SIP that was started in the last few years, where they completed their time horizon, that is getting over. And I think many people are restarting. Some are not able to because of whatever reason, or they require the money for something. I think this is an ongoing process. So as long as the gross number is improving, as long as the more number of investors are coming, I'm sure that number will continue to increase from here on too.
All right. Akhil, since you are there with us, I really want to understand, or I really want to know, are your house numbers in tandem with AMFI numbers, at least the record high investment figures?
We've maintained our run rate, honestly. We didn't have any NFO, so we've not seen a spike. So from that perspective, our market share has come down a little bit. But again, I think it's been largely because we were absent from the NFO market, and the AMCs which would have done NFOs, the market share would have gone up. But our run rate has sustained. In fact, on the alternate sales, which is our PMS and AIF, we have seen a 30% growth. So even on the HNI family offices front, we have seen increase in flow for the month of July.
Akhil, what's with the sectoral and thematic numbers over here? What kind of investment in sectoral and thematic do you think is on radar as far as investors are concerned? Do you think it has a short-term trend? Because this is the part where we talk most, where we see a lot of return chasing happening.
I would not agree with the return chasing part. See, what's happening is that the regulator has come out with variety of categories within which you can do your mutual funds, right? Now, these are about 16 odd categories. So, barring once you're done with your large cap, mid cap, small cap, the basic categories, the only category left where you can do some innovation is basically the thematic side. Now, within the thematic, what you will also see is that most of the funds offer you a characteristic of a flexi cap fund, right? So whether these are innovation funds, or you're seeing some kind of innovation happening on the active momentum strategy. This is a new category which is building up, where investors are taking interest. So within the thematic category, there are these interesting themes which are diversified in nature, but for the growth story which India is demonstrating for the next 5-10 years, there are a lot of ideas out here. I mean, India manufacturing story looks to be very promising. India digital story looks to be very promising. India innovation story looks to be very promising. So, as asset management companies and mutual fund distributors are talking to investors about these opportunities or thematic plays for next 5 years, 10 years, that's creating interest, and those who are interested in participating are participating. So, unlike what we used to talk about, investors investing into high risk, one sector fund, or, sectoral funds as a category, that's definitely risky. But what we are seeing within the thematic is a lot more diversified funds or diversified opportunities which are getting launched.
All right, I think that will be all. That's the real picture as far as the mutual fund numbers are concerned. Thank you so much, Akhil, for taking time out and being a part of this chat today. Hemant, we request you to stay on, because now it's the other leg of the conversation where we'll be focusing. And let me also invite Rohit Tandon, Senior Fund Manager, Kotak Mutual Fund. And the topic that we are focusing on right now is investing in large caps, looking at the volatility or the roller coaster movement of the market because of global uncertainties. Now, these kind of headwinds usually make an investor wonder as to what's going to be the right strategy, or where will their money be safe. There is no safety in any asset class. There is risk involved everywhere. But then large caps over here are well-established market-leading companies that tend to remain more stable even when markets turn choppy. So in today's environment, is this the right time to bet on large caps? If yes, how should one invest through active funds or passive funds? Should the exposure be purely in large caps, or is it just wiser to opt for a multi-cap or a flexi-cap, strategy-wise that gives you a broader spread? Let's discuss this now. And Rohit, welcome to the show. Okay, so what's your take on large cap? Definitely, it's time to, rebalance and reshuffle your portfolio looking at the market trajectory. But if someone wants to really put in more in large caps, what's the way around it? A pure large cap active fund, passive fund, a flexi cap, or a multi cap?
Here. Uh, if one looks at a large cap per se, large cap funds are better if one is looking at, say, an investor who has a low risk appetite. If you have a higher risk appetite, then you go towards mid caps, you go towards multi caps and all the rest of the funds. It is more dependent on the risk appetite of the fund of the investor. Funds will do as per their sort of mandate. So, for example, in Kotak, we follow a GAT sort of fund investment philosophy where we are looking at growth, but we are not going overboard on growth in terms of valuation. So we maintain some sort of a match between valuations and growth. And we also don't go, say, overboard in terms of our exposure to certain sectors. So we don't go very, very overweight. We don't go very underweight. So that sort of, process is what carries you forward. But it depends on the risk appetite of the investor.
All right, Hemant, what's going to be your take, the active way or the passive way? That's the current debate, and that's a very long ongoing debate.
Kavita, look, there are three segments of the market, like large cap, mid cap, and small cap. And I think for any investor, it's very, very important that when you decide as per your asset allocation to invest in equity, that you should have exposure to all the three market segments. Now, this can be a bit tricky for a common investor because first thing, my belief is that anyone who's investing for a longer period and one who is not very, very active investor should always have a bias towards the large cap. The problem there is how much should be there in the large cap? How do you rebalance? What is the right time to do it? And the second important aspect is that whenever you're invested in, let's say, large cap, mid and small separately, to realign the portfolio, to rebalance the portfolio, you need to come out of one segment and go into another segment. There is a tax angle to that. You need to pay some tax. So my belief is that while all three segments should be there are certain categories of funds like flexi cap, which are normally most of the flexi cap funds have a bias towards the large cap. Then there is large and mid cap where minimum 35% is invested in both, and the remaining 30% is at the discretion of fund manager. Even there, most of the funds have a bias towards the large cap, and then there is multi cap where minimum 25% is invested in all three segments. So my belief is that a common investor should look at a combination of the diversified category. One, because then the fund manager makes a decision on your behalf when to rebalance it. There is no tax angle, there is no timing. So I think that as a combination can work better for a common investor.
I'm slightly pressed on time, Rohit. One question to you. I want to know the fund manager's role in deciding an active large cap strategy. 30 seconds I have on me.
Yeah. So first and foremost, what part of the market one wants to operate in? Well, one is obviously operating in the large cap, but what sort of extra alpha is one going to bring on the table? So is it going to come only from say taking tactical calls in large caps, or there is some contribution also going to happen from mid caps? Because certain sectors are underrepresented in large caps and they are possible only to represent through small caps. So small caps or mid caps. So a combination of all these are what a fund manager brings to the table. In a passive strategy, it is just like copying an index, and if you are as such positive an index, then why copy it?
Absolutely, absolutely. There are a lot many aspects that we really need to understand as far as the fund manager's working is concerned in handling a large cap fund. But then that's all on the time front I have today. Thank you so much, Rohit and Hemant, for taking time out and helping our viewers with their investment strategies. Thank you. And for our viewers, I'm going to leave you with our WhatsApp number and email ID. Do send us your queries in case you want any suggestions from our expert. Thank you so much for watching. Goodbye.